You're listening to the greatest multifamily investment advice show. My name is Adam Ras, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. Welcome back to the greatest multifamily advice show. Today we have Deepika Sharma. Our today's guest is a multifamily syndicator with more than 10 years on real estate investing in commercial real estate on Texas market. Please help me to welcome our guest today. How are you, Deepika?
I'm doing good, Adam. Thank you so much. I am happy and excited to be here.
I like what you did, to be honest. I'm just going to jump to the subject. I like what you did on the last 3, 4 years to actually scale your portfolio. I think more than 500 unit in just 2 years. I would like to ask, first of all, what was the motivation for you to jump to the syndication and raising capital, going to mentorship programs? Why you see this as a fun?
So how I got involved, like real estate, was a field that me and my husband, we both were interested from the beginning. We have been buying properties of our own, outside America as well,
Mm,
and then I started in real estate as a real estate agent. I
mm,
took license in Texas, and then we know, like, when you are in real estate, you know how much more possibilities are there. And how we started in multifamily is when we were looking for something kind of, a passive cash flow, or I would say a income that can supplement our full-time job, and basically make this our business. And that's how, and then we were educating ourselves through different podcasts and whatnot, what is available out there, and then different mentors and masterminds that are out there, just listening to them, and kind of, and then we came across a mentorship program where they teach all about syndication and
mm,
multifamily, and that's when we joined them. And when we joined and saw other people who are already in the space and doing great, and they were uh, we saw a lot of success stories that were happening, and they were people like us who were with that IT background and probably did not have know anything about real estate. When I started multifamily, I was already in real estate for almost 2 3 years by that time. And then we thought, okay, this is something probably we really want to move forward with, and we jumped right in and started this in, um started multifamily syndication and looking in this direction.
So you're from Dallas, I think. And
Yes.
what is your upside? You're focusing only on Dallas, or you're working around San Antonio corridor and all of Austin and Houston. So what is your actual focus now?
So mostly we are focused in Dallas market, Dallas and around. That is, most of our properties are located here.
Mm,
We own and operate around 1,400 units in DFW. And we have we have looked in Houston market in the past,
mm,
and we like that market. But given the current circumstances with insurance and
mm,
insurance going high, especially the coastal areas and stuff like that,
100%.
we are kind of right now focusing on Dallas market, and we believe that there will be a lot of opportunities in this upcoming year. And that's why right now for now Dallas, but yes, Houston is another market. Austin is definitely a great market, but it is it is really really expensive. So
Mm,
we are looking in that market for, just not exactly Austin, but around to for new, maybe new construction
mm.
that is in the charts as well in future. That's what we are thinking about, and maybe working in the direction. But yeah, we are still not ready for ground up construction. So we are like preparing ourselves for that.
So based on your experience on Dallas market, how you can describe and break down the ups and down of the market as especially on the underwriting, especially right now with the recession. And as you mentioned, one of the things is the operation cost, especially with the recession, it went too high. And beside of that, you have another subject, which is the insurance, which is now, I think, 700 to 800 a unit. So
Yes.
beside of the real estate taxes is really high on Texas in general. What is your I think pros and cons when you're focusing only on Dallas market in your opinion on the last especially 3 years and especially now after the recession and the interest hike?
Well, so like I think you might be aware, Dallas is one of the, top market in the country as far as real estate is concerned. A lot of people do buy here.
Mm,
And there I would say there are a lot of opportunities as well. Like it's not like, that people are buying. So definitely there is competition, and there was the like, the properties had gone really like, very, very expensive. The before, the interest rates started rising, we saw like the cap rate was really, really compressed, and properties were really, really expensive at that time. But I think with given the interest rate hikes, it has cooled down a little.
mm,
But another thing is that since a lot of transactions happen in Dallas market, 2021 and before 2020 21 time frame, a lot of people bought properties on bridge loans. And
correct.
that is something, somebody who bought a property 2 years back and they bought a rate cap on that, it will come, rate cap will be expiring sometime this year. And that I mean, if they have been like, they have bought a lower strike, then probably they have some avenues, but there might be that kind of create some pushes a lot of sellers to kind of come into market forced to sell, basically, because they are, and that creates a lot of opportunities in Dallas market.
I
So
agree.
and that will be also a loan assumption, sorry. That is another thing that we will see a lot, and I think that makes a Dallas a great like, still a good place where you can see a lot of opportunities in 2023.
So I think this is really a good point because as an operator, we're focusing now only on fixed rate. We're trying to get away with of the
Yeah,
interest only, or as you mentioned, bridge and all of the assumption about it, which making 2023 a good opportunity for all of the buyers to find opportunities of what's going to happen because of all of
right.
the bridge loans. Uh, another thing you see, do you see any actual impact of the recession on the underwriting as a model? Like especially as you mentioned, the expenses is going high. How you're underwriting the deals right now, especially from the passive investor perspective.
So we definitely have to pivot a little, because obviously it is not the same market. It is not the same market conditions, and I mean, market is same, but not the market conditions. And we definitely need to adjust our underwriting accordingly. Like especially like certain things like taxes were going high, but uh, what I think, since the interest rate hikes, taxes might get a little bit adjusted this year, but we will see that. But as far as insurance, definitely that has gone up, because a lot of players from insurance market has stopped, like closed their business. So there are not much insurance carriers that are giving insurance, and that kind of contributed towards rising insurance rates. And like we do have, like while right now when we are underwriting, we do take all that in account. And of course, and another thing that we need to really think about is the leverage. Leverage is pretty low. Like it's there was a time when we had a leverage of 75 to
Yeah,
80%, and
yeah,
then it went down to 70. Now it's down to 60,
yeah.
or even lower sometimes. So that is another thing that we definitely adjust while underwriting. So these are certain things that we really need to focus on, and then see how, if that is something, and of course, I think the chase price has definitely been impacted, um, as like what I saw 6 months or 8 months before, like before May of last year, things were selling pretty high, and that has, I think, that will go down. And I think that those are the adjustments that we need to make on our underwriting as well.
So you mentioned really good thing here about the leverage and LTV. And here is the thing now we're seeing on 2023, I think is going to be more volatile, is the need for capital stack and more need for equity partners, because as you mentioned, LTV is 60%, so you need 40% to raise. So what you see on the horizon, like the actual passive investing trend when you're dealing with investors, especially that you're going to need more capital, raising capital to close deals. Beside of that, another subject you mentioned is I think the interest rate and the spread. But let's focus first on the capital stack. How you see the actual objections on your market when you're dealing with passive investors?
Well, I think definitely it has made a impact on passive investors. They are a little bit more conscious and cautiously investing in the properties, and because obviously the if the leverage, but the good part about being having a low leverage is that risk is low, because you
Yeah.
don't have to, bank is not, like, lender is not going to be that much involved, or the requirement will be little less from their side, and that kind of helps. But yeah, of course, I think this is something um investors will eventually, probably, there are investors out there who think that this might be a good opportunity, because there are investors who invest only in the properties where the leverage is low. they, I have met few people like that, and that is kind of another different, and I think that is something passive investors have to be educated about, that there is a low leverage means low risk. But yeah, definitely, this numbers still have to make sense. Even, like, if we are raising higher equity, that is still, it should make enough sense. But yeah, I think investors will eventually, so, like, let me give you an example. So when COVID started, everybody was like, so concerned, and people were like, getting cold feet about investing, and but eventually, they learned how this, thing, they can, get benefit out of it, and then they started investing again. And that's, I think, once people are sure that what's, how market is, where it is going, and things are more stable, investors will start investing again. But yeah, I think definitely it has make them more cautious before investing, and I think it
100%.
would be a good idea for any passive investor to do their, like, that's what we always tell them, that do your due diligence and look
Yeah.
at the deal, ask questions, whatever you don't understand in the underwriting, or what about the deal that we are presenting to you. Definitely that will help you make an informed decision.
So, what is more appealing right now in your career so far as a syndicator with the asset classes? Are you focusing on B or C? If it's value add only, so what is your strategy now when you're dealing with new acquisitions?
So we are more focused on B and A class now. We are moving a little bit towards A class, C class. B, eh, not so much, but it depends. Like, if the properties, like, if there's a deal that is, like, really, really um making sense, and it's like, giving, showing good numbers, maybe. But yeah, mostly B and A class. That's what we are focused on.
So, in Dallas market, what is the actual spread you see right now, especially that the interest rate is the fixed one is about between, you can find deals in 3.5, which is great, but usually it's between 4 to 5.5%. What you see is the actual spread right now between the cap rate and the interest rate on your market.
Um, so I think somewhere about around 5.5. Is that what it's 5.5, 5 to 5.5? I think that's where we are looking at. And
As a cap
yeah.
rate.
Oh, the cap rate you're talking about. Sorry, I was
No,
okay. No,
I'm asking about that. What you see right now on Dallas markets, the spread between the cap rate and the interest rate. The spread between the cap rate and the interest rate.
um, I think it is I'm not sure
So what is the cap
how
rate you're looking for right now on the market?
around, I think what we are looking is 5%.
Oh, okay. There is a spread already,
Yeah.
but with value add approach or buy on hold.
I think it is like five. So the properties are selling at five, and the if by with value add, I think we can get it to 4.8
Oh, okay.
or maybe 4.7, somewhere around that.
So let me ask another question because we didn't focus on it, which is the mentorship. And when you started as a syndication as a career, how you see the valuable lesson you got from your mentor in general, and um, who's your influential mentor in your real estate career so far?
So my mentor is Brad Sumrock. We are part of that group, and definitely like we'll be some of the things that Brad mentioned to us, and find it very valuable that your network is your net worth,
Mm.
and that is something we really feel, uh, and the kind of community and surrounding yourself with the like-minded people definitely is something that will take you where you want to be, because you have to surround yourself with people who are looking for the same goals, and aiming for the same things, and that helps you um stay focused, and be motivated to continue working towards the goal that we want to achieve.
Thanks a lot for being with us today. And my final question will be how the people can reach you and follow your success.
It is my email is deepika@commonsense.ventures, and we have a website. It's called commonsense.ventures, www.commonsense.ventures.
Perfect. Thanks a lot for being with us today, and we're really happy to bring you again to the show to talk more about your success on the Dallas market. I appreciate
All right,
it.
thank you. Thank you.